Hello, and thank you for joining me for another session of Dynamics NAV training. This session covers cash receipts and deposit processing. Today, during the session, we will explore cash receipts journals. Where do we use them? What are they well suited for? Why are there deposits and cash receipts? Then we'll look at deposit processing through deposit entry. We'll talk about the way payment discounts can be processed, the way payment tolerances, small amounts, write-offs, can be handled on the fly. We'll talk about foreign currency considerations when dealing with cash receipts and processing deposits. Then we'll talk about the application of payment against invoices, credit memos. Starting in the cash receipts journal, this works like any other journal in the system. It can be used to post credits, credit memos, invoices, even blank documents, special types of transactions where the dollar values, debits or credits, are not as controlled as they are with payments. They can be used with a single bank entry, which is truly the best practice for processing cash receipts through the cash receipts journal. One line for the deposit, rather than balancing each line item where the entries will be reconcilable as a deposit through bank rec, rather than one deposit per customer check. The application of cash when processing will be examined in detail, but through the cash receipt, we have the ability to apply line by line as a document by document, multiple entries using the multi-line functions from apply entries, or apply later. Apply later means we can post a cash receipt, a check from a customer, without going through the allocation, the distribution, the remittance. We can simply post that cash and put it on the customer's account. Maybe it's a prepayment. Maybe it's waiting for a credit that has been included in their distribution. They short paid a bill, they took a deduction, a chargeback basically, for something. That credit needs to be created or entered and will not be available until after we post that credit. Reversing of journals is possible from any of the journals that we post from. This means that when we've posted a cash receipts journal, as long as we unapply, we will be able to reverse that journal. So let's take a look. We're in Microsoft Dynamics NAV 2009 in the role center as an accounts receivable administrator. When running through the cash receipts journal, I can see directly on the screen I've got past due invoices, sales return orders, blocked customers, my activity stacks. And right within the activity stack, I've got a quick access button to go through and process a cash receipts journal. When calling up a cash receipts journal, we can work in multiple batches. Perhaps we may have multiple people that work within cash receipts processing. I'm going to use this journal. We're going to enter a cash receipt. And the way a cash receipt is done, following the best practice, is to, on a first line, my recommendation, and it could be the last line, alternatively, is to enter the bank account. Select the bank that we are actually going to be posting to. In this case, it's our operating bank account. And put in the total debit amount of the actual deposit. In this case, it's $25,000. We will make sure we have blank balance accounts on those lines. So now we're out of balance by $25,000 on this journal. I'm also going to change a setting on the batch. This batch has a default balance account. I'm going to get rid of that so that we have the ability to go through and not necessarily have a default balance account. So within this bank, we're going to go through and I'm going to edit this and clear out this operating account as a balance account and push OK. So now when I enter the next line, it won't automatically default a balance account. Now on the next line, I'm going to go ahead and I'm going to record that it's a payment from our customer. So account type is customer. And now we'll go ahead and select which customer. And I can start typing in, maybe it's from the Canning Group as an example. I'll click on the name column. So the system will go through and sort by the name, for example. And it's the Canning Group. And the Canning Group paid us a check for $10,000. So I'm going to go ahead and I'm going to put in minus $10,000. Now, why did I do that? Because when it's a customer, I'm going to be reducing the receivable balance. The receivable account is an asset. You credit that account to reduce it based on the check. They sent a payment. The debit goes to the bank. It's part of this $25,000 deposit. And $10,000 is the amount of their check. I'm going to also add one new column. So I'm going to choose columns. And I'm going to add the external document number. And we're going to move it up. Now the external document number in the cash receipts journal is I'll refresh that screen. Choose columns. External document number. Choose OK. So now here it is. Our external, that's the customer's check number. So in this case, and this might be my deposit slip as an example, but the external document number here, we're going to say it was customer check 6054. Now that is postable on itself as a line. I can post this, the customer's payment 6054. This is on account. That will not be applied against any invoices. We received another payment. This payment was check number 144. It was from a customer. And this one was from Spotsmeyer Furnishings. Now this customer has a bill to assigned. A master customer that gets billed to. So 01454545. So we'll go ahead and put that in. And they're billed to New Concepts Furniture. They paid us a check for $15,000. And if I put in $15,000, you'll see my balance goes to 0. Now, I'm going to post this, and the system will post 2 checks on account. I could, instead of leaving it on account, if I desired, I could use the Applies to Document Number field and click on it and see all of the open entries for Canon and select one of them. So the $10,000 payment is going to be applied against this $10,806 invoice. And I can drill down and see what happened with that invoice. I'll just click OK. And the system brings in that amount. Now, $10,000 of this check will be applied against that specific invoice. That's another option. So rather than leaving it on account, this will apply. A third option, if I clear those fields, is to use the Apply Entries function at the top of the screen. Using this process button, I can choose multiple lines to be applied against this payment. So I can come down and I can see, okay, there's a $10,000 invoice, $10,806. You'll also notice when I scroll on this form, there's a lot of fields. I want to see which invoice I'm looking at as I'm scrolling. I don't necessarily need some of these columns in the middle. Besides viewing columns, with the flexibility of Dynamics NAV 2009, with the role-tailored client, we can right-click, and instead of just choosing columns, when I choose columns, I can add something called a freeze pane. So right after the document number, I'm going to click Add a Freeze Pane and click OK. And it asks me to close this form and reopen to activate my personalization. If I now click Apply Entries, as I scroll to the right, you'll notice that I can see the credit memos, I can see the invoice numbers, the date, and the freeze pane exists so that I won't have to keep going back and forth. I can see the dollar amounts, and I can choose which entries I want to apply against. So in this case, if I wanted to apply $10,000 towards this entry, we can go ahead and choose Set the Applies to ID, and now click OK. And now this will be applied against that invoice, leaving an $806 balance. Perhaps I also wanted to take a portion of a credit memo in that application. We can go back to the Apply Entries function again, and I can choose a portion of this credit memo or the entire credit memo. I'll click on this line and click Set the Applies to ID. So you'll see now my balance, $423.86. I'll click OK. And we'll let that post. We'll go ahead and post that. So we'll leave New Concepts Furniture's amount on account, and we'll post Cannon Group's and apply it to a credit memo and an invoice. We can click Reconcile, and Reconcile will illustrate for us the final results based on this transaction. What's the effect going to be in the various accounts that are hit at the end? So you map accounts as reconciliation accounts, and this will tell you what will the net change be in those accounts as a result of this transaction. You can see that the $25,000 debit is actually going to hit my revolving credit account. The bank account is mapped to 22,100. The net change in the journal as a result of this posting is this $25,000 debit. All the other accounts are not affected. These are the 5 accounts I've set up in this training company as reconciliation accounts. And we'll go ahead and we'll post. Now, the document is out of balance by $25,000. Document number G0 2001. And that's because the document type has to be the same, and the document number and the date on each line. This is the only way that the system will allow us to post. So we're going to go ahead and post the transaction by just simply putting in the correct document type on each transaction. Document type and document number must match when using this source code, the cash receipts journal. And that posted. So we can take a look at the results associated with that. Back on my Roll Center, if we go and we take a look, as an example, at the Cannon Group's account, and I go ahead and call up Cannon, and we drill down into Cannon's balance and expand that page, we can see the invoices that are open, and you can see the invoice 103005 has a remaining amount of $423. The credit memo also no longer appears as open. It's no longer appearing in the list. We can drill down to say what happened. Why is it $423.86? There was the application of a payment. That payment application was worth $10,382.86 because it was $10,000 in cash, and the payment was actually increased by the credit memo applied. That works extremely well in situations where a customer has short paid an invoice, but they indicate on the remittance the total value of their application, including the chargebacks or deductions they've taken. Posting credits and including them will increase the value of the payment that is applied. if we, instead of looking at the open entries by clicking on the balance field, we go to related information, customer ledger entries to see all of the transactions, I can see the information relating to the payment, which was $10,000 that was applied, and you can see the $10,000 remaining amount 0. I can see the credit memo, $382 that was applied fully applied and has a balance of 0. I can actually drill down into that remaining amount to say what makes that up and see the payment was applied. We can go through and examine and take a look at where it was applied. We can unapply that cash receipt. An alternative to cash receipts is the ability to use the deposit entry screen. The deposit entry screen doesn't have the same level of functionality as the cash receipt engine. Cash receipt journal allows you to process cash receipts as well as invoices, credit memos directly in that journal. Directly in the journal, document type here could be credit memos, documents could be invoices, where we don't have that level of flexibility in the deposit screen. A deposit is posted per bank account. We can record customer checks. We can record vendor refunds. We apply entries in the cash receipt or the deposit screen via a function, or we can leave it unapplied and apply later. Special considerations need to be given to bill to master customers, or if your customers happen to be structured with a national account or a buying group, where we might post invoices to multiple entities, but we actually have the cash coming in from one entity. The system does not natively support that kind of a business requirement. Clients First has developed some component functionality that provides an exact fit for that unique requirement. Let's take a look at the deposit entry screen. And directly in my activity panel of the Roll Center page, I have the ability to create a new deposit. We'll hit enter, and the system will go through the number series and assign a number. In the journal batch, we'll just select which batch, and you'll notice that the system is providing me with a warning that only one deposit header is allowed for that journal batch. So we have to go through and make a decision about which batch we want to work with. There is a new deposit already in process. And if we look at the deposits, you'll see there is already a deposit in place that someone had begun working on. There was only one deposit per batch allowed per user at any time. So we're going to go ahead and I can call up that journal batch and start working on it. We can delete it and create our own new deposit, but it's a pretty common error or question that people call in with. So this deposit's in process for this bank. What's the total deposit amount? So here I'll key in it's $35,000. You put that in as a positive value because it's up on the header and it knows it's going to be associated with the bank account. You can choose to do this by dimension using a department or a project code. These are your global dimensions. The currency code is defaulted or adopted from the bank account. Now we go down to the lines. Our account types here can be a customer or a vendor. When we choose a customer, The system will then tell us what's the account number. It'll give us our customer list. So we got another check from the Canon Group. The document date is their check date. This date is very important as it's what's utilized by the system when determining the payment within due date, within discount due date terms, within tolerance terms for the grace period on a discount. The document type is a payment or a refund. It's a payment. The check number and how much is that amount. Now, if we leave that blank, which is the best practice, and click on the function Apply Entries or Shift F11, the system pops open my Apply Entries form. I can now choose the line items. So they paid the balance of this invoice. They paid this invoice. And I'll push OK. And the system brings back in the dollar amount for the line. This dollar amount should match the amount of their check. On the next line, we'll go through and we'll choose the next customer that sent money. And we'll put their check number in. Now, also people will call and ask, what happened with the header? We already have money here. When I simply click on this and hit F5 to refresh the window, it then brings in the dollar amount and updates the difference. This needs to be a 0 in order for the deposit to be posted. Spotsmeyer Furnishings sent us $29,221.29. How convenient. So now this deposit is in balance. Nice things about deposits, there is a deposit test report. The system saves, instead of with the cash receipts journal, a simple journal that we can call up as a journal register, we can save and access in the future a posted deposit and regenerate this type of a report illustrating the overall deposit that was made. We'll go ahead and post this deposit. And if we look at posted documents, posted deposits exist. Here's the posted deposit. We can call it up and maintain history on the way the deposit looked and even print the posted deposit. Payment discounts and tolerances are certainly a big part of cash application. They are generated from the GL setup on the Application Fast tab, where we choose the rules for payment tolerances and for payment discounts, as well as discount grace days. The GL posting system setups will determine where discounts and where tolerances go. We can also enter the information after the fact by just choosing it to do an application. If perhaps a discount was forgotten or a tolerance was not granted. Let's take a look at that from a setup perspective. So if I go to General Ledger Setup, and we go to the Application Fast tab and expand it, you'll see my setup options that are defaults. What's my application rounding precision? Do I want to get payment discount tolerance warnings? A payment discount tolerance is that a payment that can be posted with a discount if it's within a grace period. For example, if my payment terms are 2% 10, net 30 for my customers, and the customers always pay in 20 days, and they always take the 2% discount, rather than having to put that in and override every time, I can change that to put in a 10-day grace period. Putting in a 10-day grace period will go through and it will change for every open entry for every customer and vendor that is not blocked from getting discounts, which is a setup on a customer, that they can now, instead of it's 2% 10 net 30 days, it'll be 2% within 20 days, net 30 days. That will post, if we give them the discount, as a payment discount tolerance. And we can choose, do we want to hit the normal discount account on the GL for those discounts that are granted, or would we prefer to use separate accounts to indicate that it was a tolerance posting, not the normal discount? We also have an option to establish a payment tolerance. The payment tolerance is if an invoice is short paid within a specific dollar amount, and there is a function to change that tolerance globally. Changing the tolerance globally allows us to put in what is the maximum tolerance. As a good practice, we would recommend that you put in, as an example, maybe 2% of an invoice with a maximum tolerance of up to $10. Maybe it's wire transfer fees that are always short. Maybe in your business, it's just $1. If an invoice is paid within $1, write it off. I don't want to go chasing those dollars. They're immaterial. You can also choose if this is for currency by currency or for all currencies, and push OK. And the system will go through and update and indicate that a tolerance is allowed. If we take a look at the Canon Group and we drill down into their balance, you'll see that we've got some opening entries. The invoice, I did apply the payment posted through the deposit system. So I want to unapply that. Where do I find it? Well, I go from Canon to Customer Ledger Entries. And as I scroll down, you'll see here's the payment of $5,778.71. I want to go through and choose Actions, Functions, Unapply. And when I choose to unapply that, it brings up a listing of what the application was. And I push the process button, Unapply. The system will go through, and although there was no financial impact, if I now drill down into the balance, I now have additional open entries. I have a payment with the remaining balance, and the invoices that were paid also have open balances. Maybe the reason that I reversed it was to take advantage of a discount. I have the ability from within the open entries screen to choose Actions, Functions, Apply Entries. And when I choose Apply Entries, the header is populated with the line item I was sitting on. Now, I was sitting on an invoice from 2010. Well, that's not what I want to do. So I'll press Escape, and we'll go to the line item I want to do the application of, my payment or a credit memo. And I'll choose Actions, Functions, Apply Entries. Now the header of my application entry screen indicates the posting date, the document number. It is identical to the posting screen or the application entries screen from the deposit or from the cash receipts journal. From this screen, I can choose where do I want to apply this. Now, perhaps I want to apply it against the $5,354.85 invoice as one of them. However, this was due February 19th. It happened to have a payment discount date of January. They would have had to pay back in January, and they're paying this in July. There's also a payment discount tolerance that was for January 27th. There was no tolerance extended. What I can do is modify this date. Let's push the regular payment discount date out to a day equal to or greater than the date that the check arrived. So let's say if they pay by August, then they are entitled to a $107 discount. And I'll go ahead and I'll set the application ID on that line. There's no payment tolerance on that allowed because it was closed when I changed the setup option. But you'll notice the other entries had a tolerance of $1. A tolerance only comes into play when the payment application will be within that tolerance. So if I applied $232 to this invoice, I'm sorry, that's the discount amount. If I applied $11,774 to this line, it won't write off the dollar balance as a warning at payment tolerance because it's $2.25 away from being closed. But if I paid $11,776 and left a 25-cent balance, the system will write that off as a tolerance. So I'm going to go ahead and just post the application for this one entry, the $5,354.85. But I'm going to get a $107 payment discount. And when we go ahead and post the application, it will post, and now that transaction, that payment still has dollars left. It's got $530.96 remaining. You'll notice the original amount of the payment, $5,778.71, was the amount that the Cannon Group sent on that check number. But look at the $5,885 amount. Where does that come from? Well, when I drill down into that, you can see that that payment was increased because a payment discount was basically taken by the client, increasing the amount available to apply by $107.10. And I was able to add that by simply going through the Apply Entries function and just editing the field that indicates what's the discount date or what's the payment discount tolerance date. I could equally change. You can also put in a new tolerance amount and type in whatever you'd like there if you want to record a write-off of an amount on the fly. Currency considerations. When using a cash receipts journal, the realized gain or loss on an invoice that we're paying is based on the exchange rate when we pay the bill. So if we were carrying an invoice and the exchange rate was $1.20 euros to $1, and now we're going to pay, or $1.20 US to €1, and now it costs $1.45 dollars US for €1, and we wanted to pay that invoice, we're going to get an expense of 20 cents per as a realized loss, 25 cents per dollar, because the exchange rate, we were carrying the invoice at $1.20, and when we paid the bill, it was $1.45. The currency realization rate from a cash receipts journal gives us the ability to put in a spot rate or a rate that we wish to recognize from within that cash receipts journal. The currency column, it's not even displayed natively, but I'll say choose columns, and we'll add the currency code, and we'll move that up, and we'll push OK. When I've selected a currency code on the line, I can use the ellipse to enter a manual override to the relational currency realization rate. That can be done line by line. Perhaps if some line items are at a contract arranged rate. If you have lots of foreign currency dealings, most businesses have a separate bank that carries the currency. In those instances, there is no need to put in spot rates if we're paying something in Australian dollars from an Australian dollar bank or a euro invoice in a euro bank, there is no gain or loss. The gain or loss is based on the value of the currency we're carrying in our bank account, and the transactions are not realizing a gain or loss because we're paying them in the currency of origin. It is possible to do application across currencies. Satisfying an outstanding balance in one currency, a US dollar invoice, pay a US dollar cash receipt, can be posted against or applied against foreign currency transactions. As you've seen, cash can be applied line by line using the applies to document number on a cash receipts journal. From the cash receipts journal or the deposit screen, we can do apply entries. We can also do apply entries directly from the customer ledger entry screen, as long as we're drilling into the balance field, which only shows open entries. We can also do after the fact application, which is done from the customer ledger entries screen. I hope you found this session useful. You have a very flexible and powerful tool in Dynamics NAV 2009 with a lot of options about how to apply cash and process transactions throughout the system. Thank you.